I'd like to begin with a brief description of the Political Theory Project and the uniqueness of our Janus Forum program series. Our mission at the PTP is to invigorate the study of ideas and institutions that make societies free, prosperous, and fair. Secondly, we aim for all of our programming to promote interdisciplinary methods and ideological pluralism. But what does that mean? In short, we want to bring together individuals from different subject fields, different identities, and different value systems to think and discuss the most pressing social issues of our time. Janus Forum lectures, such as this one, provide an event space where members of the Brown community can engage alternative intellectual perspectives in their most sophisticated presentations by top scholars and in direct comparison to one another. When designing Janus lectures, we simply try to think about who's the most established members of an academic profession whom also happen to have a substantially different outlook in their research approach and/or conclusions. Yes, very smart people and very well-informed people can and do often disagree. Tonight's conversation is entitled Socialism Now, and we are joined by Professors John Roemer and Andrei Shleifer. Professor Roemer's work treats socialism as a normative ideal, a sort of moral goal towards which our social, political, and economic institutions ought to strive towards. Professor Roemer then recommends a variety of structural changes to corporate governance, profit sharing, and citizen entitlements. Thus, his work offers a unique attempt to build a more practical and workable model of socialism. Professor Shleifer's research approaches socialism from a radically different vantage, which is to say, Professor Shleifer and transition scholars like him don't approach socialism at all. Rather than aiming towards socialism as a moral ideal, Schleifer's work is focused upon coping with the real practical consequences of socialist failures. In this vein, nothing provided more strength and support for the Washington Consensus regarding the necessity of market economies than the practical realities surrounding the collapse of Soviet communism. The format for tonight's event is straightforward. Each presenter, beginning with Professor Roemer, will discuss the motivations and findings of their research for approximately 30 minutes. Following both presentations, we will have an equal period of time for questions and answers from the audience. Thereafter, we'll conclude for a brief reception in the lobby. I hope you all enjoy hearing from our guest researchers and take note to attend future Political Theory Project events. Now I'd like to introduce our first presenter. John Roemer is the Elizabeth S. and A. Varick Professor of Political Science and Economics at Yale University. He is a fellow of the Econometric Society and has been a fellow of the Guggenheim Foundation and the Russell Sage Foundation. His research concerns political economy and distributive justice. He is currently teaching political competition and a workshop in political economy. His publications include Political Competition, published by Harvard University Press in 2001, Equality of Opportunity, also published by Harvard University Press in 1998, and Theories of Distributive Justice, again, Harvard University Press, 1996. Please join me in welcoming Professor Roemer.
Thank you, Dan. I noticed Dan entitled this mic. Dan said that this session, this meeting is Socialism Now. And it's not what the poster says. The poster says Socialism Now. Okay, and I prefer actually to be a little more agnostic. And so I like the question mark at the end. I want to give you a quick outline of what I'm going to talk about. I better control my time in the next half hour. 5 points. First of all, I'm going to focus on the socialism as a way of solving the problem of massive inequality of income and wealth, which is characteristic of modern capitalism, in particular in our country. So that's points 1 and 2. Thirdly, I'll say something brief about the failure of the Soviet socialist experiment, my diagnosis, and I'm sure Andrei will talk more about that because he's more of an expert on it than I. I'm then going to talk about market socialism and human nature and end up with a proposal for how socialism might be organized in a modern economy. So I'm going to begin with familiarizing you with figures you may have seen about the degree of income and wealth inequality in the United States. So these are figures from the well-known book by Thomas Piketty called Capitalism in the 21st Century. The graph is a graph of the fraction of total wealth in the United States that's owned by the top 0.1% of households. So you notice that in prior to the First World War, around 1914 isn't on here, but around the First World War, the top 0.1% owned about 1/4 of the total stock of wealth in this country. That means all property, real property, financial assets, equities, bonds, and so on. That amount fell precipitously due to the three great catastrophes of the 21st century, the First World War, the Second World War, and the Great Depression. It wasn't so much that property was wiped out in the United States. It wasn't, because the war didn't come to us except in one place, at Pearl Harbor. But it was because capital values fell, and capitalists also consumed out of their capital during that period. So that by 1977, the fraction of wealth owned by the top 0.1% was only, I say only in sort of quotes, 7%. That means that each such family owned about 70 times as much as the average family. But now, since 1977, the concentration of wealth has increased, and we're almost up to the inequality level that we were prior to the First World War. Now it's the case that about 22% of all wealth is owned by the top 0.1% of households. So the top 0.1% of households comprise 140,000 households. There are about 14 million households in this country. No, is that right, or is it 140 million? 140 million. And 140,000 households comprise the top 0.1%. Note that the period 1929 to 1977, from that previous graph, inequality decreased pretty sharply. And as I said, this was due to the destruction of capital values and consumption out of capital due to those catastrophes. The period 1945 to 1975, which was the period when the inequality was the least in this country, many people look back upon that as the golden period of capitalism in the United States. Growth was pretty robust at about 2.5% per annum. Wages were rising, and so on. But that was the worst period for the very wealthy. In France, those years are called the Trente Glorieuses, the 30 glorious years. So, and throughout the post-war years in Western Europe were a period, of course, of reconstruction after the war, and the same thing was true in Western Europe, that the fraction of wealth owned by the very top of the distribution was much smaller than it had been in the previous century. Let me look at income. So on the graph here, we have the wealth share of the top 1%. So that's 10 times as large a group. The top 1% own now about 40% of all the wealth in the United States. So the total wealth of the United States is approximately $80 trillion. It's about 4 times GDP, which is now about 20 trillion. So total wealth is about 80 trillion, and the top 1% own about 32 trillion of that. Income is less concentrated than wealth. So the top 1% only capture about 20% of the income. And that's always true in a capitalist society, that wealth is more concentrated than income. Oops. Okay, what about the bottom 90%? So the bottom 90%, the top graph shows the income share of the bottom 90%. They get about 60% of the income. The bottom graph shows the wealth. So the bottom 90% only own now about 20% of the wealth. So I said the top 1% owns 40% of the wealth. The bottom 90% own 20%. The people in the bottom half own essentially zero. Their debts cancel out their wealth. So they own a trivial fraction, less than probably 1% of the total wealth. The group between the 50th centile and the 90th centile own the rest. You can do the arithmetic. What is it? It's 20 plus 40, 60, so they own about 40%. So that's the middle class, the group between the 50th and the 90th centile, and that group has grown that in the 20th century. The middle class essentially hardly existed in the 19th century. Oh, I'm sorry, this keeps happening. Among the advanced countries, American inequality is by far the worst, followed by Britain. We can see from the graphs that this inequality, as I said, reached the lowest point in the 1970s and has been growing steadily since then. I now want to talk briefly about the split between capital income and labor income. So capital income is profits, interest, rents. Labor income is wages and salaries. And it's useful to partition the income between, roughly speaking, between what is earned by labor and what is earned by capital. And this is a panel with 8 countries on it. Let's just look at the United States. The U.S. is this triangle here. So the fraction of total income, which is capital income, is between 25 and 30%. That's been actually going up in recent years, but according to Piketty, in the United States, about 1/3 of total income is capital income. Capital income is much more unequally distributed than labor income. It should be in the next graph. This shows how different sections of the income distribution depend upon capital income as their main source of income. If we look at the top 0.1% of the wealth distribution, that's the red dots at the top, currently about 70% of their income comes from capital. Whereas if we look at the bottom 90%, only about 10% of their income comes from capital. So that's quite a sharp difference. So the bottom 90% depend almost only on labor income as the source of income, whereas the very top of the distribution depends mainly on capital income. Now you'll notice that the fraction of income that is capital income for the very wealthy was 90% around 1963, and it's fallen. What does this fall due to? This fall is due to the rise of CEO salaries and salaries in the finance sector. Those salaries, even though they may be millions of dollars, I mean, a CEO of a large company may earn a salary of $20 million a year, that is called labor income. So there can be people who are very rich on labor income, and that phenomenon has largely occurred in the last 40 years. What's the goal of socialism? The simple tactical goal of socialism is to equalize the distribution of capital income. And as I've said, that's about 1/3 of total income in the United States, and it's very highly concentrated, as you've seen from the graphs. Socialist transformation has attempted to nationalize large firms and properties that account for most of the capital income in a country. Public ownership of the means of production, which is the phrase from the socialist manual, is the main tactical goal. The profits of these firms, if they were state-owned, would then escheat to the Treasury and be used for investment, public goods, and distribution of transfer payments to citizens. Socialism has focused much less on labor income. In a market socialist economy, labor income would be determined by the market, and the way of equalizing labor income would be mainly through education, much more compensatory education of disadvantaged children so that they would have better skills and be able to earn more in the market. But as I said, the main goal of socialism has been to equalize the distribution of capital income. So what would that mean? What would that mean? Here's a back-of-the-envelope calculation. In 2014, the average adult in the United States, the average adult income in the United States was about $64,000. The average capital income was 1/3 of this, about $21,000. The average income of the poorest 50% of adults, believe it or not, was $16,000. Essentially, none of this was capital income. Therefore, if capital income could be equalized through public ownership, and that's an if that I'm going to discuss, the bottom 50% average income would increase to $37,000. Poverty would be eliminated, and the income Gini coefficient for the US would be lower than Sweden's Gini coefficient is at present. Because almost all capital income redounds to the top 10% of the population, the capital component of their income would fall sharply if capital income were equally distributed. Why did the Soviet experiment fail? So the Soviet experiment, from an economic point of view, the main thing that it did was to place all industry in the hands of the state. So capital income was socialized. It all went to the state treasury and was used, the profits of firms and the rent on land all went, the implicit rent, profits of the farms, the collective farms, all went to the state treasury and was used for public purposes, for public goods, for subsidies to individuals, and so on and so forth. Why did the experiment fail? So this was the first major experiment in the world with nationalizing capital income. There were two, roughly speaking, I think there were two major causes of the failure. The first was dictatorship, political dictatorship, which was introduced by Lenin in 1918 when he dissolved the parliament, the Duma, in January of 1918, shortly after the revolution. And dictatorship prevented the correction of errors through democratic accountability. Secondly, the fear of markets produced massive inefficiencies due to the impossibility of coordinating a complex economy with central diktats. Very hard to induce innovation without markets. The third reason is huge expenditures on defense because of the Cold War, due to the fear of socialism by the West, and especially the US, were very wasteful in the Soviet economy. They couldn't really afford the defense expenditures that they felt they had to make. Finally, cynicism of the people about socialism due to these many errors which occurred, not to speak of the purges and the labor camps and so on, so there was huge cynicism among people due to the perverted form that socialism had taken in the Soviet Union, reduced support for the regime, so that eventually it simply imploded in 1991. What are the main lessons for socialism in the future? First, it has to be democratically implemented. So I'm a robust Democrat with a small d. Secondly, must use markets extensively. We can't run a big, complicated economy without markets. Markets have an extremely valuable function in decentralizing the allocation of resources. Is public ownership of large firms a necessary component? By public ownership, I mean state ownership. I don't mean the corporate private form. It probably is necessary, but maybe not. An alternative would be sharply progressive taxation of wealth and income. Recall that, the Scandinavian countries have followed this model. They have private ownership of most firms. They're not state-owned firms. but they tax income very heavily, and especially the income of the rich, and they redistribute it, so they have the most equal income distributions in the world, probably the healthiest place to be in the world if you were going to be born an average person is in the Nordic countries. Recall that public ownership is a means to an end. The end is the approximately equal distribution to the citizenry of the nation's capital income. The Nordic countries, as I've said, have achieved admirable economic equality using taxation, but maintaining highly concentrated private ownership of most firms. If that could be a model for the United States, I would be all for it. So I'm not advocating, that's why I said that public ownership or state ownership of firms is not the unique way to achieve this outcome. It could, in principle, be achieved through taxation. The major skepticism that one has about socialism is the following. Can an approximately equal distribution of capital income accomplished through a combination of state ownership of firms, sharply progressive taxation of income, and a sector of worker-owned firms, is that feasible? Would entrepreneurs and CEOs in particular, there will still be CEOs of firms in a market socialist economy, would entrepreneurs and CEOs continue to innovate and construct competitive firms without the huge rewards that US capitalism gives them? That's the major skepticism. And I can't say that I have a surefire answer, but I have intuition about it. George Romney, who is the father of Mitt Romney, and he was a senator. Before he was a senator, he was the CEO of an auto firm. I don't remember which one it was. One of the big auto firms in Detroit, earned a salary 50 years ago of $225,000, which in today's prices is about $2 million. Romney said CEOs should not earn more than this. That's George Romney. The ratio of CEO to average worker income 50 years ago in the United States was 17 to 1. Today, in similar firms, it's 300 to 1. In France, Japan, and Finland, the ratio is about 60 to 1. In China, it's about 43 to 1. So the United States has the highest ratio of CEO income to average worker income of the advanced countries. And there I go again. What motivates, so I'm going to ask, is it really necessary, is the secret of success of American capitalism this huge income inequality? I believe that what motivates CEOs and entrepreneurs is largely, as with everyone, the respect of their peers, and I should add, the love of the game, especially for entrepreneurs. In the US, wealth is life's report card. One signals to one's peers one's social value with one's consumption, which is a proxy for one's wealth and income. Our current president is a case in point. In a socialist economy, entrepreneurs and CEOs would continue to exist, but their remuneration would be much less. Is such a regime feasible? Could we depend upon such a regime which pays CEOs and entrepreneurs much less, doesn't allow the accumulation of fortunes of 80 billion, could we depend on such a regime to produce the kind of innovation that we have benefited from? John Maynard Keynes wrote in 1913 of the salaries of the finance people in the City of London, how long will it be necessary to pay city men so entirely out of proportion to what other servants of society commonly receive for performing social services not less useful or difficult? My claim is such pay is not determined by economic necessity, but by the social ethos and by politics. Neither is it human nature which requires such rewards. Human nature is elastic, and social practices and ideas can influence hugely the concept of a socially acceptable salary. Indeed, my belief is that the reason that the CEO salaries are relatively much smaller in other advanced countries, as I showed you a couple slides ago, than in the US, is not because American CEOs are feathering each other's nest, sitting on the boards and awarding each other large salaries. I'm not convinced that's the reason. I think it's that the American salaries may in fact be competitive. They may be the salaries that the market produces. And that the salaries in other countries may be much lower because of the social ethos in those countries, which frowns upon that kind of extreme unequal rewards. So I think that it may be that one piece of evidence for the possible fact that it's the American CEO market which is competitive is that CEOs of American firms come from all over the world. It looks as if the labor market for hiring CEO talent is really a competitive market for American firms, whereas Japanese CEOs are almost all Japanese, and German CEOs are mainly German. So I think the social ethos may work to hold down CEO salaries in those countries rather than, unlike the United States. Now, is the fact that those salaries are competitive mean that they must stay that way for efficiency? I think not. I think that the people who do those jobs would certainly be willing to do them for much less, and that could be achieved through taxation. I thought I had a slide in here, maybe I'm going to come to it in a minute, which talks about the level of taxation that one could put on high salaries in the United States without harming, without reducing efficiency. At any moment in time, the technology available to us is determined by past investments and human creativity. But incomes of those in command of large firms that harness that technology are determined with a degree of freedom that is fixed by social convention. It's not surprising that the libertarian laissez-faire ethos that received a powerful steroid injection under Ronald Reagan and Margaret Thatcher has changed that social convention and relaxed its objection to inequality. The anti-union and anti-state views of these ideological leaders have been massively influential as well. I want to present to you very briefly a proposal by an Italian economist who actually teaches in Germany named Giacomo Corneo, which is being published this year by Harvard University Press and presents a design for market socialism. So in Corneo's proposal, the country would create, he talks mainly about Germany because he's teaching, he lives there, it would create a sovereign wealth fund with which it would, and I'll tell you how it would create it in a minute, with which it would purchase equities from around the world. And the profits on those equities, the dividends, would be used for all purposes in the country, public goods, transfer payments to individuals, and so on, a social dividend. And it would also create a second institution called the federal shareholder, which would comprise the government's buying 51% of the shares of a number of large firms in the country, and of course exercising 51% of the voting power. And the dividends from those shares, of course, would also be distributed to people. So in its role as shareholder, Corneo advocates that the government directors would aim at profit maximization. Of course, profit maximization would be constrained by anti-pollution laws, by regulation, and so on. Corneo argues it would be feasible to raise a social welfare fund with a value of about 1/2 of GDP fairly rapidly in the United States. That would be a capital value of about 10 trillion, about 1/8 of the present wealth in the United States. Estimates of the social dividend that he computes for per citizen would be $2,000 per year, leading to a substantial reduction of poverty. There's one state in the United States that actually has this kind of social dividend, and that's Alaska, where state-owned oil fields create a social dividend of about $2,000 per person per year. How would the funds be raised for purchasing equities, either for the social sovereign wealth fund or the federal shareholder through privatization of some public assets, such as emission rights, airwaves, and so on. New bonds. We're in a situation now where the global interest rate is far below the rate of return on capital, and so it would be possible to finance the purchase of bonds with the profits from the sovereign wealth fund, and capital taxes, taxes on stock market transactions, on capital gains, and a stiff inheritance tax. What Corneo argues is that this plan is economically feasible. Politically feasible. Political feasibility is, of course, another issue. The Corneo proposal attempts to equalize the distribution of a significant section of the nation's capital income. There will surely be skepticism about the feasibility of doing so without degeneration of the federal shareholder into the inefficiencies characteristic of Soviet-style public ownership. The key safeguards are maintaining a competitive environment and independence of the directors from political influence. Think as a model of the Federal Reserve, a public institution with massive economic power that is shielded fairly effectively from partisan political interference. Is this utopian? I think not. There is a significant degree of freedom in the distribution of a nation's capital income. That's the key, I believe, subject to maintaining economic efficiency. This is the big secret that capitalist ideologues seek to maintain. We get a glimmer of this from looking at the large variance in CEO salaries across the capitalist world. Think of this. It's clearly in the interest of the winners, say the top 1% in a society, in the competition for economic rewards to attempt to convince the rest of us that the current distribution is necessary for economic efficiency. That's the idea of trickle down and not to kill the goose that lays the golden egg. But prudence dictates one should be suspicious of such claims. The failure of the 20th century, because they're being made by the people who benefit from them. The failure of the 20th century socialist experiments, flawed due to the fear of democracy and markets, does not prove that our very productive economies must allocate their wealth in such an obscenely unequal way. Mao Zedong was wrong in saying that power comes out of the barrel of a gun. Capitalist power is maintained principally, I think, through the promulgation of wrong ideas about the necessity and permanence of our present arrangements. Why focus on the redistribution of income? Because extreme inequality is a major, if not the major, contributor to a polarized, fractured society. Solidarity among a nation's citizens can't be achieved in the presence of massive material inequality. Can the rich and poor consider each other to be social equals? No way. That, I think, is something quite deeply embedded in human nature. It would require another talk to list the ways in which the sharply increased income inequality in our country has contributed to our dangerously fractured society. Thank you.
Andrei Shleifer is a professor of economics at Harvard University. He holds an undergraduate degree from Harvard and a PhD from MIT. And before coming to Harvard in 1991, he taught at Princeton and the Chicago Business School. Shleifer has worked in the areas of comparative corporate governance, law and finance, behavioral finance, as well as institutional economics. He begged me not to mention this, but according to REPEC, Andrei Shleifer is the most cited economist in the world. Please join me in welcoming Professor Andrei Shleifer.
Well, thank you very much. It's wonderful to be here and to give you the opportunity to hear some of the wrong ideas that the previous speaker has alluded to. So I think I'm going to say a few words toward the end, about the new proposals for socialism, but let me spend a bit of time talking about the experience with socialism in history, and because I think it would be useful to set the stage for further conversation. So one thing we do agree on, which is important, is that the definition of socialism is state ownership of the means of production, which is to say state ownership of factories, state ownership of banks, state ownership of land, and so on. I think there have been experiments with other forms of collective ownership, like kibbutzes and so on. But I think that we should stay with this standard common definition. The ideas, the experience with socialism is quite extensive. The ideas are probably about, if you really think about socialism, about 200 years old. It's not just the Soviet Union. We have quite a bit of practice and experience to evaluate socialism. The ideas in the form that we're discussing come primarily from Marx about 150, 170 years ago, but I think it's very important to remember that socialism was one of the central economic ideas of the 20th century, which is to say it started, as was pointed out, with the Russian Revolution, but it was an idea that was widely adopted throughout the developing world. It was important, of course, and critical in China with the Chinese Revolution. It was important in India after independence. It was important in most African countries after independence. It was central in Latin America, not to mention the East European countries that were occupied by the Soviet Union after World War II. So it really is one of the most pervasive ideas in economic ideas, maybe central economic idea of the 20th century. Now, one thing I want to talk about, which I think was alluded to, is what were the results or the outcomes of these socialist experiments. I think there are two things that are important to keep in mind. The first is the political, which is to say that there is a complex relationship between socialism and dictatorship. There are people, philosophers, who would say that actually the only way you can have a socialist system is through a dictatorship. Because the reason for that is that when the government controls all the means of production, it's so powerful that it controls people, and so it controls people's work, and so the only political equilibrium the system can converge to is a dictatorship. And of course, if you look at the Soviet Union, if you look at China, if you look at many countries in Africa in the 60s and 70s, if you look at Latin America, that is a common path. I don't want to say it's a logical necessity. I just want to say that is a common path. Now, that common path cannot be ignored, because in that form, the combination of a socialist economy and a communist dictatorship, which is by far the most important form of socialism in the 20th century, those political systems are responsible for murder of tens of millions of their citizens. Both Stalin and Mao killed a lot more innocent people than Hitler did. I think it's very important to keep that in mind when we think about socialism. Now, again, I don't want to suggest that this is a logical necessity. There are countries like India that have gone for many years down the socialist path, but it is something that we need to keep in mind when we think about socialism. What about the economic evaluation of the socialist experiment? Well, we need to remember that it is not just the Soviet Union, which is to say, this was the experiment that was widely adopted. It was an experiment that failed in the Soviet Union and in Eastern Europe, with these countries achieving living standards substantially below those of our market economies. You can compare, if you like, to make any comparison you want. You can compare North Vietnam when it was communist to South Vietnam. You can compare North Korea to South Korea. One place starved, another place achieved the living standard of the richest countries in the world. You can compare East Germany to West Germany. You can make any side-by-side comparison you want. Economically, the socialist experiment failed. It's failed not only in the large, but it has failed also in the small. So, for example, the State of Israel was organized around the idea of kibbutzim, which is a socialist form of ownership, and that institution has essentially been dying out as the country has developed. So as we look at the world today, we see countries like the only countries that are really seriously adhering to socialist principles in organizing their economy. Cuba, which of course has been turned from one of the richer countries in America to one of the poorest. North Korea, I don't need to really dwell on that topic. Maybe Venezuela, but not much left. I mean, again, experience is not destiny. You can imagine, and I will speak to that matter in a few minutes, that there will be a new and better way to design socialism. But I think it's equally unwise to forget that what socialism brought in the 20th century is not equality, is not some kind of an idealized community of solidarity, but stagnation, misery, and murder. Now, as was pointed out, in the last 40 years, the world has made a very sharp turn away from socialism. This turn actually covered pretty much the whole world, which is to say it started in Western Europe with disappointment in state ownership of business and privatization, but it went and spread throughout the world with countries in Africa, in Latin America, in Asia, most importantly China, with important caveats embracing capitalism, not necessarily calling it capitalism, sometimes calling it socialism with Chinese characteristics, which I think is a literal translation of capitalism. But that has happened everywhere. In India, that has happened pretty much everywhere in the world. So what has that change brought? Well, it has brought, I should say, by the way, and I will stress that later, is the other part of the world where we have seen this experiment of reversal from, or turn from away from socialism toward a market economy, is Eastern Europe and the former Soviet Union, where the fall of the Berlin Wall precipitated a pretty universal turn of all these countries toward market economies. I should say, much more consistent and universal turn toward market economies than that toward democracy. So what has that brought? Well, that has brought rapidly rising living standards in China, in India, in Africa, in transition economies, everywhere in the world, but not just the rise in living standards, which is to say, if you look at some of the things that we really also care about, quite separately from living standards or incomes, if you look at education, if you look at health, if you look at life expectancy, if you look at just about any indicator of the quality of life that real human beings care about, the period of return, if you like, to capitalism or to a market economy has also been a period of rapid improvement. The number of people living on less than $1 a day, which was a point of obsession for a long period of time, has been dropping much faster than anybody has anticipated. The number of all kinds of indicators of child health has been improving much faster than anybody has expected. The UN Millennium Development Goals for 2015 were achieved and surpassed quite substantially. It's actually, and again, I want to keep drawing distinctions between the market economy and democracy. It just doesn't seem to be a very close call in this competition between socialism and capitalism for over the 20th century, that which one has won. If you look at living standards in Eastern Europe, they're probably 3 or 4 times higher today than they were 25 years ago. So it's, if this were a basketball game, we would be talking about 99-3 as the final score. So why are we here? Why does hope spring eternal? Why are we talking about socialism? You know, socialism now, you might say, you got to be kidding. I think that the impetus for socialist ideas, it changes over time. I don't think that Marx was that interested in inequality. I don't think Lenin was that interested in inequality. But I think that the new impetus of the last decade is the unquestionably important rise of inequality in the United States and in many of the Western countries. Now, the proposal now for socialism is to equalize the distribution of capital income and to, with the idea that the state would own all the businesses, collect the dividends, and then distribute them to the population. Well, there are a few questions that one needs to think about. The first is that the state actually, when it owns things, never distributes a damn thing to the population. It keeps it, which is to say, I don't think there's ever been a socialist country in which, first of all, you know, businesses run under socialism tend to lose a lot of money rather than make it. But secondly, I don't think I've ever heard of actual distributions by state-owned firms. In Alaska, by the way, it's revenues from the excise tax on private firms There are no state-owned oil fields in Alaska, as far as I know. That would not be American. But let me say a couple other things. The underlying all this, and underlying all this idea, is the envy or hatred of the rich. So when we see all these beautiful graphs about the rise of income inequality, by the way, that's all of you a few years from now. Underlying all this is this notion that somehow the incomes that the rich receive are unfair or undeserved or unearned. Let me just say a couple things about that. The first is there is the CEO obsession, which is that somehow the bad people and all of this are the CEOs. One thing I want to point out, just using the numbers that were put on the is that CEOs are really not that important in the basic narrative of income distribution. So even if you think that CEOs make $20 million a year, and even if you think there are 500 large firms where they make that much, if you multiply 20 million by 500, you'll get up to 10 billion, which is basically what Jeff Bezos made one day last week. The CEOs really don't matter. If you actually look at the numbers, which you can do because we have the numbers, who are the rich in the United States? They are the entrepreneurs. Okay? They are not the CEOs. They are not the bankers. They are not the doctors. They are certainly not the landowners. They are the entrepreneurs. They are the people who own businesses, who start businesses, and who earn both labor income and especially capital income from these businesses. And sometimes they're gigantic businesses. You know, if you think about Google and Facebook and Amazon, sometimes they're moderate-sized businesses. But the lion's share, the same numbers that were used for the calculations that you saw, show that the lion's share of high incomes are entrepreneurial incomes. Now, again, this is not a comment about fairness. It's rather a statement of facts. Now, why does it matter what these incomes are and who the people are? Well, it matters because we have a lot of problems in the world. And income inequality is one of them, and wealth inequality one of them. But there are many others. For example, we think that the state of the environment is one of the central problems facing the world today. Well, who is solving these problems? Do we think that public firms and government is solving these problems? Actually, if you think about the central ways in which the environmental problems of the modern world are being solved, it is the electric cars, it's the problems related to energy and the use of fuels. It's the problems of the modern world are being solved with electric cars, self-driving cars, solar energy, alternative forms of energy, most importantly, storage technologies, which probably mean that 10 years from now, world's demand for oil and fuels that actually are largely responsible for pollution is going to, despite economic growth, is going to diminish. Ask yourself, who is solving those problems? Are any of these problems being solved by publicly owned firms, by state-owned firms? Not that I can think of. I don't think Tesla is state-owned. I don't think that people who are making batteries are state-owned. I don't think that innovations in solar energy are coming from state-owned firms. This is the central point about public ownership and state ownership, the idea of socialism. The story is not really about this non-existent ideal of distribution of dividends. The story is about innovation. The story is about innovation. Adam Smith wrote, "The state can publish Shakespeare's plays, but it cannot get them written." The state can publish Shakespeare's plays, but it cannot get them written. The source of solving our problems today, as always, is innovation. And innovation in the world today, as it has for the last decades or centuries, has been introduced by private entrepreneurs, by innovators, by people in the private sector, and not the government. Now, where does that leave us? Well, I think that one thing we can all agree on is that if you nationalize firms, or if you go back to the world of state ownership, you are going to go into the Stone Age as far as innovation is concerned. I was amused by the fact, I was going to show it to you, that the poster for this session was this Soviet poster with a worker and a peasant and an intellectual, you know, with a hammer and a sickle, and I thought it was only appropriate because that would probably be the technology we would still be using in a socialist economy. Now, none of this is to say about the appropriate levels of taxation and redistribution. So let us just agree on the basic point that government ownership or public ownership is a terrible idea, and it's a particularly bad idea today when the world relies so much on innovation. We can have a debate, or we do not have to have a debate, whether the optimal level of taxation and redistribution is higher than it is today. It is a mistake to think that the level of taxes is incredibly low in the United States. It's actually reasonably high. I think one needs to worry, which is a legitimate concern. If you try to tax people more heavily, they go elsewhere. And this is probably a very good thing for the United States, that all the entrepreneurs and innovators want to come in rather than go out. It probably makes one be much more optimistic about our future. But that is a legitimate debate. That is a legitimate conversation. That is not a conversation about socialism. That is an entirely different conversation about the level of taxation, or the appropriate levels of taxation in a capitalist economy. Okay? Perfectly happy to have that conversation. It's it's not a straightforward set of issues, but that's not the question before us. I totally understand why this is where John Roemer wants to go, given the wonderful experience with state ownership. But if the question is one of socialism, if the question is one of public ownership today or now, the answer is you've got to be kidding. Thank you.
Now ask both of our presenters to take seats by the presentation table.
A naive question, perhaps, but the year that Goldman went public rather than private, the CFO was paid something like $140 million to $170 million bonus. Was there any discussion that some of that wealth could have been transferred to the employees? Has that happened in corporate America at all, where boards are discussing that issue?
I don't know.
Did I?
Is the microphone on? Yeah. I mean, it's refreshing to have somebody be feeling bad for the employees of Goldman Sachs.
Well, that could be translated to Gillette or any
My
corporate
recollection
entity.
is that the firm was extremely generous with all the people who work there, as it remains today.
At the same time, lower level employees were let go. So I guess my question has to do with decision-making more at the corporate board level as to whether they are sensitive to this idea of transferring some of the CEO wealth to the worker.
I'm sorry, I didn't brush up on Goldman Sachs. I should have, but my best guess is that Goldman Sachs today employs 10 times as many people as it did, maybe 20, as it did at the time it went public. So I don't think that was a situation of layoffs or reductions in labor force.
Again, I was trying to apply that to all of corporate America, using that as an example. I hope I made myself clear, but I guess I didn't. Okay, sorry, guys.
Look, you know, a market economy has, all market economies have turnover of jobs. It's extremely rapid. People lose jobs. People gain jobs. In the United States today, we have probably some of the lowest levels of unemployment that we've had in a very long time. Those things may exaggerate how good the state of the economy is, but 8 years of Obama administration have brought tremendous benefits to the economy. So the fact of the matter is, but also market economies have developed ways, maybe inadequate, but still ways to take care of people who lose work or who are between jobs. I don't think there is, again, I'm not sure what is the solution you're proposing, but certainly I don't see how socialism would be the answer to those concerns, which is what we're discussing today.
Daniel?
Hi, thank you for the talk. I'm kind of curious about the innovation point that Professor Shleifer was making. I know Professor Roemer talked about people innovate and do things for social value. And you basically said that most innovation comes from private individuals and entrepreneurs. But how do you explain sort of like nationally sponsored innovation like NASA or military technology? Like, what is driving that?
Well, we know that the state, I mean, Andrei said that the state keeps the money that it earns from taxation. That's nonsense. The state has funded huge amounts of research in the health services and in the sciences. The argument is made that most of the basic research, which has enabled the innovations that we benefited from in the technology sector, was financed by the state, by the government. So I think that's an important point. I'd like to say something about entrepreneurship. I mean, Andrei spoke as if I oppose entrepreneurship. I don't at all. I think there should be freedom to form firms, but I think that when a firm gets to be sufficiently large, it can be taxed extremely heavily, or it can be nationalized, and the entrepreneur can be made the CEO of the public firm. I think that would be the logical thing to do, because that entrepreneur knows obviously most about the firm that he or she created. So if you notice, the Cornell proposal that I outlined doesn't say anything about stopping the formation of small firms. It says, first of all, you create a fund to invest in global equities, and then you distribute that to the citizens, and not even with an effort to controlling those firms. And then you try to have a controlling position in a number of the very large firms of the country, obviously not the small firms. So I think it's critical to maintain freedom of formation of small firms, but I don't think that, you know, Bill Gates wouldn't have done the innovation he did if he'd been had the possibility of maybe earning $500 million instead of $80 billion. I think that would have been a sufficient motivation for him to do what he did. So that's an empirical question. I mean, would in fact capping the incomes of entrepreneurs at a few hundred million, or maybe even larger than that, the size of their firms, would that be sufficient to induce people to innovate? Or do you really have to have the very, very high rewards, which a very, very small number of entrepreneurs make today in the United States? You know, it's a lottery whether you're going to be one of those who succeeds. So that's an empirical question. And I think, you know, one thing that Andrei said that I do agree with is that the danger in public ownership is that if the state owns all the firms of the country, it has tremendous economic power, and the equilibrium, the political equilibrium towards which that leads is dictatorship. And I think that's a real danger. If you notice again in the Corneo proposal, the state owns 51% of these firms, not 100%. And the reason for that is to maintain private ownership as a ballast, you know, against what the state directors might want to do. And also, competition is extremely important. So that is to say, global competition of firms. I mean, we're not talking about having one large firm the way the Soviet Union did in each industry. So I think entrepreneurship has to be part of socialism. Now, if I include markets and entrepreneurship as part of the vision of socialism that I have, you know, Andrei is likely to say, well, that's capitalism. And I agree, it's not the vision of socialism in the 20th century that he was using as a foil, namely the dictatorial non-market economies around the world that he named. If you want to say that having democracy and markets means it's not socialism, then we have a semantic difference. I'm saying that would be a qualitatively different kind of income distribution, and I think also the quality of life would be very different.
Thank you. Professor Shleifer, did you want to comment?
I mean, look, I don't know exactly how to say this. You know, my guess is if you told Elon Musk tomorrow that Tesla is getting nationalized, but it's okay because he can stay as the CEO under the enlightened guidance of the current Secretary of Commerce, I would suspect that he would be on vacation tomorrow and probably stay on vacation for the rest of his life. So I think there is a certain lack of reality in these dreams that you could somehow take a bunch of money away from people. Well, we don't know exactly how much, and we could nonetheless keep the engine going. I think that the reason I bring up the environmental problems is that for years economists have been talking about state solutions to these problems. You know, should we tax oil? Should we tax gasoline? Should we tax coal? Should we do this? Should we do that? Should we put in restrictions and regulations? And as we continued talking about this, the environmental and implementing some of this, the environmental problems got worse and worse and worse. And today, it looks for the first time that they actually are likely to be solved, or at least to a substantial extent solved. And the reason for that is, again, the innovation, overwhelmingly the innovation by the private sector. It doesn't mean that the public sector doesn't have a role. By the way, I'm very happy to be criticized, but for the things I said, not the things I didn't say. I did not say that the state keeps all its tax revenues. I said that I've never seen a state taking income from a company that it controlled in distributing it to the public. So that's a separate statement. But let's just go back to this thing. We have a thing that works and seems to solve the problems of the world. It is not that I deny that inequality is an issue, but inequality is a problem that we solve through taxation, not by destroying the engine of progress that is private innovation.
Greer?
Yeah, so Professor Roemer, in your book, you had a pretty radical idea about changing how the stock market works through a coupon system. And I was wondering if you could go into detail about how that would work, and then if Professor Shleifer, if you could comment on that idea.
Well, I wrote that book, and that book was published in 1994, which means I wrote it before then, which is, what, 24 years ago or something. I don't really hold to that particular view of a mechanism that I did then. The idea basically was that you would, it was an idea of using a stock market to allocate capital, but to have the firms be relatively equally owned by the population through a system in which they were distributed shares in the corporate sector of the country at the age of 21, and that they could trade those shares on a stock market, but the shares would be denominated in another currency, not in dollars, but in some kind of coupon. And you would not be allowed to sell coupon. You couldn't cash out your coupon system. You couldn't cash out your stake in the national economy. So the idea was, it was during a person's lifetime, during the lifetime of a generation, inequality would certainly arise through people making different trades, but that would be erased at the end of the life through the stock portfolios of citizens escheating to the treasury and being distributed to new adults. But I think there are lots of problems with that. I don't particularly hold to that mechanism anymore, and I really would prefer a more direct mechanism like the one that Corneo outlines. Now, in terms of taxation versus public ownership, as I said in my talk, that I was not sure state ownership was necessary. And the Scandinavian countries are certainly, in my view, the countries that are the closest to achieving the socialist ethos of any countries in the world. The five, not the Scandinavian, I should say the 5 Nordic countries, which are Denmark, Norway, Sweden, Iceland, and Finland. And they've done it through taxation. Andrei is completely correct to say they haven't done it through state ownership. If that can work globally in other countries, that's fine with me. I don't have I think that's a formula. I'm not sure that that's the only formula, and I think in other countries, maybe state ownership is a route that can be taken. I don't have a principled position against taxation. So I would certainly say that I am a social democrat. I mean, if I think those are the best societies in the world, and if that works, great. Now, there's also a distinction between getting to socialism and the sustainability of socialism, if it exists. And I have not talked about getting there. I think it's very difficult to create socialism in one country, because rich people will leave if they have an alternative that to keep their money and if they move to some other country. So I think the issue of getting there is a whole another issue that I haven't addressed. What I'm talking about is the feasibility of having a system which distributes capital income relatively equally and maintaining entrepreneurship and innovation. So I think that the fact that, what's his name again, Telsus, the guy who makes the car? Sorry? I can't hear well enough, but anyway, the guy who makes the car, the self-driving car, he's grown up in a capitalist society. He has a certain ethos. He has certain expectations about what he needs. And if you tried to constrain him in the ways that I'm talking about, he might just go to the beach if he has enough savings and not bother to produce any more. But we're talking about a society with a very different ethos, a society that has a much more solidaristic ethos than the current society. Even Scandinavian, Nordic social ethos is much more solidaristic than the ethos in this country. So, I mean, look at Germany, which is not a Nordic country, but in which the political leader said we're going to take 1 million refugees in this year. Can you imagine an American president saying that? And the fact there's been some opposition, and the right-wing party has grown in Germany, but by and large, there was social approval of that move to let in 1 million Syrian refugees. That's more than 1% of Germany's population. Can you imagine letting in 3 million refugees into this country? I mean, is there a feeling of solidarity that people would go for that? No. So there are very different social ethos in different countries, and so you can't take the ethos that has come to exist at present in the capitalist countries as being typical of the way people would feel with other arrangements for the distribution of income.
Thank you. Professor Lowry.
Yeah, I'm Glenn Lowry, professor in the economics department. I'll be brief and ask you to be brief in response since we're running out of time, but I want each of you to address something that the others said. Andrei says, he says, in effect, if I hear him, democratic socialism is not a stable equilibrium in the long run. He says there's interaction between economic organization and political organization that has worked out over the 20th century to the detriment of the socialist societies. I'd like to ask you to comment. John says, and I was stunned, he thinks CEO pay in the United States is the result of the outcome of competitive market forces playing out, not of insider dealing of boards of directors that are patting each other on the back. But he also says, comparing the US to other advanced countries, the CEO pay is very much less equal, or I should say very much higher. And he says that that's a consequence of the social norms around what constitutes acceptable compensation. Do you buy that? And if not, how would you account for the difference across countries in the relative CEO pay?
Can we start with Professor Shleifer?
Okay, so on the first point, on the point with CEOs, I think that that's exactly right. It's not board members patting themselves or whatever it is, having some side deals. And the reason we know that, we actually know that, it's not just a conjecture, is when private equity funds or other private firms where there is no interest in this kind of double dealings hire CEOs, then they pay them more rather than less than publicly owned or whatever, shareholder-owned firms do. So it is clearly, I mean, Professor Roemer is exactly right about that. It is what the competitive process leads to. Why there are huge differences across countries? Well, first of all, we're seeing some convergence, which is not, is exactly what you would expect. Second, I think it's very important to remember that in big parts of the world, including but particularly in Western Europe, the people who run these firms are also owners of these firms, or part of the families that own them, and so they receive extraordinarily high incomes, but not in the form of salaries that the outside CEOs receive. So I'm not sure I would feel sorry for the CEOs of firms in Germany or in Belgium or in France. I think there is plenty of income there that just takes a different form.
Okay, my question was that Andrei proposed that the only political equilibrium when the state owns the controlling heights of the economy is dictatorship, authoritarian state. And I think that's a very important point, and I don't know that it wouldn't happen. But I have various reasons to believe that the 20th century experience is not a guide to that. Why? Because the model of 20th century socialism was authoritarian control of the state by a party and control of the economy by the state without the use of markets. And those, I think, were two major errors. So everybody, all the socialist countries, followed that model. And they followed it because Lenin did it, and then they copied Lenin. And then Stalin, of course, the Soviet Union achieved a tremendous ideological power over people because of the extremely important role that the Soviet army played in the Second World War. I mean, they were the ones who defeated fascism more than any other country. So out of the Second World War, the Soviet Union emerged with tremendous prestige, to the point that, and that's why the Americans and the West was so afraid of the Soviet example. In the first elections, in every European country that had elections in 1945 and 46, socialist, labor, and communist parties together won approximately half the vote. That's why the capitalist West was afraid of communism or socialism, and that's why the Cold War happened. I mean, and McCarthyism in this country and attempts to turn people against socialism. So that was the model. So if you were going to do socialism, you didn't use markets and you had dictatorship. That's why I can't say that's not evidence for me. We now have a whole experience of the failure of that model, and we're looking for a new model. We're looking for a new model. So I'm proposing what might be a new model. This young guy who asked me a question about the thing I wrote in 1994, that was another model that I now think isn't such a hot idea. But we don't know that won't happen. We have to experiment.
Thank you.
We have a relatively short period in the life of the human species in which we've tried anything like this. And so it's too early to say that these experiments wouldn't succeed.
We have about 5 minutes remaining, and I see 4 attendees. Why don't we take all 4 questions and let both of the panelists respond to the totality of the questions? So if you could state your comment as briefly as possible.
Sure. So it just seems like so far the debate has largely sort of abstractly resolved around a question about nationalize or not nationalize, and should the state own some capital, or how much or not. So I'm just curious in hearing maybe a little more in detail about your views, because on the one hand, there's a concern about innovation, but of course, some privately owned firms are not operating in competitive markets. There are certainly private monopolies. I take like the rail system in Britain. I mean, that kind of infrastructure lends itself to that kind of consideration. So there's that issue, but on the other hand, widespread nationalization and ownership of capital might create concerns about what that would mean for competition in markets and innovation, and it just seems like a complex and subtle issue, and so I'd just like to hear a little more about both your views about when should capital be seized by the state, to what end exactly, what are the criteria, what are the main concerns for both of you?
Thank you.
Yeah, my question was about the environmental question. It was mainly for Professor Shleifer, and it was that, like, it seems like you seem to think that capitalist innovation is really the answer to the environmental crisis we find ourselves in. But I think it's important to notice that it was capitalist innovation that really got us to this point in the first place, and it is sort of like the reckless extraction of natural resources because there were market incentives, and there remain market incentives to do so. And I wonder if you think that there are sufficient market incentives for the innovation to happen. Certainly there is increased investment in things like solar energy, but we're not seeing that nearly on a wide enough scale for us to stop like carbon emissions like today, which is basically what needs to happen if we don't want to enter a climate dystopia. And it seems to me like you don't have the market incentives on behalf of the private industry, like oil companies who like do research on climate change then actively suppress that research. Like, is it too short-sighted within the capitalist innovation framework to actively solve that, or do you need like subsidies from the government?
Thank you.
Thank you both for speaking. So my question is, I was in Cuba for a lot of the past year, and a phrase I kept hearing there was sustainable socialism that Raul Castro is using to describe the liberalizations that are taking place slowly in the economy. So like we've seen a lot more entrepreneurship happen as a result in Cuba, but a lot of people there are saying that it's not sustainable because the inequality has grown so much. So I'm curious if either of you think that the current Cuban economic model actually is sustainable, or if it would converge back towards more state control or towards capitalism.
Thank you. Vaughn, last question.
Yeah, my question is also pertaining to the environment. So with Elon Musk, his various businesses receive billions of dollars of federal subsidies and tax credits, and it's been argued that because his companies are such long shots, he purposefully reaches into industries where the government is offering subsidies. And the vast majority of innovation recently on solar panels, which the innovation that has made them actually a competitive source of energy, has come from China, from heavily state-backed firms. And I was interested how it can be said that government is not. I can understand the argument that in order to start these firms, you may need private entrepreneurs, but I'm curious how it can be said that government is not also a necessary component when it seems that the overwhelming majority of the progress we've seen on this issue has come through heavy government intervention.
Thank you. I propose that each of the panelists speak for about 2 minutes in terms of closing responses to the questions, or as long as you prefer. Go ahead, Professor Shleifer.
You want to go first? Okay. I'm not sure I can answer all the questions, but let me bring out one theme which we have not sufficiently emphasized, which is the issue about the role of government and the role of government ownership is critically an issue about government passive ownership or government subsidies or government support versus control. The statement, it is absolutely true that in environmental situations and many other situations of research and development, the government subsidized various activities. What is critical, however, and this is true about the environmental situation in particular, that the ideas and the innovation and most importantly the implementation of those ideas come from the private sector and from entrepreneurial firms. It's not true that everything that Tesla is involved in is subsidized by the government. A lot of it is driven by private investors, by people willing to make down payments on cars, by shareholders, and so on. So in thinking about socialism, it also pertains to a lot of the things that Professor Roemer said. I mean, is there going to be much harm if the government, as it often does in Germany, has a passive 10% stake in Volkswagen, or even 20% stake? I don't think anybody cares about that. What is absolutely central and what is absolutely not negotiable and what is absolutely fundamentally contrary to the basic ideas of socialism is that if you want to have progress, you cannot have government control. You cannot have government control. And that seems to be the central bottom line. Thank you.
Professor Roemer?
Well, you answered the fourth question, and the second question was directed to you. The third question was about the future of Cuba, which I just can't say anything about. I don't know enough about it. And the first question, I'm going to actually take a liberty and not quite respond to it, but say something that none of us have talked about, which is why we care about inequality. So why do I care about inequality? Because I think that it's not the fact that we envy the rich, the successful. It's the fact that opportunities are so massively unequal in our society that most people don't have a chance to develop their talents and their lives. So, I mean, if you know, I'm sure at Yale, I know it's a fact that the 11% of students come from families in the bottom half of the income distribution. Probably the same thing at Brown. And that's an example of the unequal opportunity. Now, you might say to me, oh, well, poor parents are poor because they're not very smart, and genetically speaking, their children aren't going to be very smart, so those kids don't get into Yale, not because of lack of opportunity, but because of lack of native talent. I don't think that's true. Number one, I don't think it's true. I think that a very large amount of lack of equal opportunity is not due to the fact that people have less talent or less intelligence. It's due to unequal socioeconomic conditions, being raised in families which are poor and uneducated. And so the real reason that it's wrong for the top 1% to own 40% of the wealth is because that wealth could be used to equalize opportunities for the whole population by investing in them. That's the unfairness. It's that we have this hugely productive machine, and most of those innovations are created by people who had good opportunities. I don't imagine a very large fraction of successful entrepreneurs grew up in families in the low part of the income distribution. They were probably had fairly well-educated parents and had a lot of opportunities themselves. So that's the reason to care about this, that we want to redistribute income so that everybody, or most people, can improve their probability of having a life which is interesting and productive. That's why do I focus on capital income? Because that has been historically the socialist tactic. But it's a tactic, I mean, eventually one wants to change the distribution of skills in the society so that labor income is much more equal also. So I define socialism actually as a situation of equality of opportunity, where people don't benefit by virtue of luck, but by virtue of effort. And luck means today largely the kind of family you grew up in, and the wealth of your family and the education of your family. And also, I'm even more radical than that. I believe being born smart is good luck. Having a good genetic pack is very good luck. And I don't see that people who are smart or who have lots of native talent should live better materially than other people.
Thank you. We are officially out of time. Thank you all for attending. Join me in thanking our presenters. Please join us in the lobby for refreshments.